Welcome to SG Investment. Our channel is dedicated to helping you make informed decisions about your money and to guiding you on your journey towards financial success. Subscribe now and join our community of like-minded individuals on the path to financial freedom. The easiest way to invest for beginners. Are you ready to take the first step in investing but unsure of where to start? Look no further. Investing can be intimidating for beginners, but it doesn't have to be. With the right knowledge and approach, anyone can start building their wealth and achieving their financial goals. In this video, we will demystify the world of investing for beginners by discussing the easiest ways to get started. From setting a financial goal and creating a budget, to choosing the right investment vehicles and avoiding common mistakes, we've got you covered. So, let's jump in and start exploring the exciting world of investing. 1. Setting a financial goal and creating a budget. Before you start investing, it's important to have a clear idea of what you're saving for and how much money you can afford to invest. A budget can help you track your income and expenses and identify areas where you can cut back in order to free up money for investing. 2. Investing in a diversified index fund. One of the easiest ways for beginners to start investing is to invest in a diversified index fund, such as an S&P 500 index fund. This type of fund allows you to invest in a broad range of companies and sectors, which can help to mitigate risk. Additionally, index funds tend to have lower expense ratios, which means you'll pay less in fees and keep more of your returns. 3. Using a low-cost online brokerage. There are many online brokerages that offer low-cost options for buying and selling investments. Some popular options include Vanguard and Charles Schwab. These brokerages often have user-friendly platforms that make it easy for beginners to navigate the investment process. For automatic investment plans, another easy way to start investing is to set up an automatic investment plan, such as dollar-cost averaging. This strategy involves making regular contributions to your investment on a set schedule, regardless of the current market conditions. This can help to take the emotion out of investing and ensure that you're consistently putting money into your investment. 5. Avoiding chasing hot investments or trying to time the market. One of the biggest mistakes that beginners make is trying to time the market or chase hot investments. The stock market is unpredictable, and attempting to predict short-term fluctuations is a difficult and often futile endeavor. Instead, focus on long-term investing and building a diversified portfolio that is aligned with your financial goals. 6. Keeping your investments for the long term. Investing is a long-term game. It's important to be patient and not get discouraged by short-term market fluctuations. Research has shown that staying invested for the long term is one of the best ways to grow your wealth. 7. Staying informed and educated. It's important to stay informed and educated about the market and your investments. This will help you make informed decisions and better understand the potential risks and rewards of different investments. 8. Seeking professional advice. If you're unsure about where to start or how to proceed, consider seeking the advice of a financial professional. A financial advisor can help you create a personalized investment plan that is aligned with your financial goals and risk tolerance. 9. Reviewing your investments regularly. It's important to review your investments regularly to ensure that they are still aligned with your financial goals and that your portfolio is well diversified. Make any necessary adjustments to ensure that your investments continue to work for you. 10. Diversifying your investment portfolio. Diversification is one of the most important concepts in investing. It means spreading your money across different types of investments, such as stocks, bonds, and real estate. This helps to minimize risk by ensuring that your portfolio isn't overly exposed to any one type of investment. Conclusion. In conclusion, investing can be a powerful tool for building wealth and achieving your financial goals, but it can be overwhelming for beginners. However, by following the steps outlined in this video, you can make the process much simpler and less intimidating. Start by setting a financial goal and creating a budget. Consider investing in a diversified index fund, use a low-cost online brokerage, and consider automatic investment plans. Avoid chasing hot investments or trying to time the market. Keep your investments for the long term. Stay informed and educated about the market and your investments. Seek professional advice if needed. Review your investments regularly and diversify your investment portfolio for minimizing the risk. With the right knowledge and approach, anyone can start building their wealth and achieving their financial goals. Remember to be patient, stay committed, and stay disciplined on your investment journey. Thanks for watching. Don't forget to like, comment, and share.